Good morning, good afternoon, good evening, and welcome to the main channel where we are covering the Amazon earnings. We're live on the extra channel at the same time, about to start the Apple earnings. So if you're listening to me now on the extra channel, you are waiting for the Apple earnings, which is about 30 minutes away. We do have the numbers. The numbers are out. The Amazon numbers are also out. And we are just waiting now for the Apple earnings to start first, and then we'll have the Amazon earnings starting just shortly after. Let me check around the studio. Yes, we're all looking good. Fantastic. So, thank you very much, everybody, for joining me everywhere across all multiple platforms, multiple screens. Thank you very much. It's a very, very big night this evening. So I'm going to give everybody on the extra channel, you have the link pinned to the top if you want to join me for the Amazon earnings. Many of our Lucas aides are keeping both channels open at once. And I am now going to give my viewers watching me on the main channel, I'm going to give you the link to the Apple earnings on the extra channel, which is 30 minutes away. Okay, so let me do that now. Let me just type this in to my main audience here on the main channel. Come into the chat. Let me know you're here. I can't see anybody at the moment. I know you're there, but I can't. There's no chat at the moment, so come into the chat. Thank you very much indeed. Why has the stock falling while the earnings are pretty good? It's a rotation. We're going through rotation now. There'll be a really quick bounce back up again. It's why I'm fully in. The businesses are strong and good. They're taking money out just to buy it back. It's a Wall Street final play before we get the rate cuts. That's what's happening. I bought more this morning. You've seen my big video, my road to $1 million. Okay, so Apple earnings, I'm going to give that to the people now watching on the main channel. Apple earnings, is on, whoops-a-daisy, on extra. Let me give that to you. So I'll give that to my viewers on the main channel. There we go. I'll pin that to the top. There you go. So if you want to bounce in between the two. Now then, Apple is happening on the extra channel. You'll be hearing that shortly and I'll stop talking. Of course, the Amazon earnings has a little while to go after that. And again, I'll stop talking, but I will monitor both streams so I'll know what's going on. So that should be quite an event. Anyway, we're all good. So, exciting evening for everybody. Guidance, yes, guidance was a bit lower than anticipated, but still lower than Wall Street, but still very, very good. Amazon have had a very good earnings, and there's no need for this. So it's just a rotation. This, to me, is an ideal time to buy. Even if it goes down lower, I don't care. I recognize value, quality. That's what I'm buying right now. Anyway, we're all good. Paul B, stop complaining, you're live. Always just replying to a private message on Discord from Paul B. Lovely to see Paul B in the show tonight. Yeah, excellent stuff. Excellent. Okay, making sure we're all good. I'm monitoring so many screens at once. It's a little bit of a challenge, but we've got a way to go. In about 15 minutes, we'll start getting the information from Apple coming on the screen. My portfolio is just starting to recover now. Oh, whoa, yeah, oh, whoa, there goes Apple. Look. There goes Apple. Let's see how it does. Can you see Apple going up there all of a sudden? Let me have a look at what we've got. on Apple on the extra channel. We're covering Apple earnings. On the main channel, we're covering Amazon. Let's have a look. Let me go into my Bloomberg feed and see what I've got here on the screen. Anything? Apple.
Right, they're bouncing around here, so we're trying to make sense of it. Ed,
beat
first
earnings.
blush,
Beat earnings.
What are you taking away from these?
Yeah,
Apple
I kind
numbers?
of alluded to this in the preview in the Top Live blog. Great beat for iPhone revenue in the quarter, which is interesting because we're pre-16.
Yeah, like why are people buying phones right now? They should be waiting, right?
And there was a lot of evidence in markets like China that they were buying the 15 generation with the intention of holding on to it. And then I go to the Greater China revenue missing estimates. And the third-party data is not always right. But it did tell us that Apple was slipping in Greater China.
This is the IDC data?
The IDC data.
Okay.
There's Counterpoint Research. There's loads. But my point is that there was worry they did really face domestic pressure on the handset market there. And you always look to China as a point of focus. So you have to read between the lines because on the earnings call, CFO Luca Maestri often addresses that issue head on, how they did in the market in China specifically.
It's a beat, 85 over 84.
Earnings per share coming in $1.40 per share. That beat estimates of $1.35, so a beat there as well.
Yeah, I don't know. I'm looking at kind of our right-through buyer, Mark Gurman, marking a return to revenue growth last quarter, he says, topping analyst estimates.
Yeah, I'm happy with all of this. Everything's selling off unnecessarily, and I am very happy. All the mega caps are performing well, waiting for my portfolio to bounce back. Very, very happy with that. Very, very happy. So far, so good. Apple is shooting up. So we've got about 12 minutes before we bring in the build-up for the Apple earnings. If you're with me here on the main channel, we're watching Amazon. That will come afterwards. So it's a very, very exciting evening. Very, very exciting evening. Let's put all the comments on the screen here on the main channel. Why is the stock falling? We've covered that. Lucas A's, James 007. Tap the button on the way in. Please do click subscribe and ring the bell. And please do tap the like button as well. On both channels, whether you're watching on the extra channel, or you're watching Apple, or you're with me on the main channel watching Amazon, we will be covering the earnings call when it starts. Okay? So there is, whoops-a-daisy, I just pressed the wrong button there. There's the smash the like button. Okay, smash the like button if you can. That would be great. Let me read more comments that are just coming in. According to Google, the stock is still in the 184 range. RG, maybe guidance was off or something crazy for it to sell off. Everything's looking good now. No more money, says Gio. Welcome to you. Why did it fall off? Is it because of the revenue? No, everything is fine. What we've got is a rotation. This is why I've gone all in today using margin. I'm really fully in on my portfolio, big time. Let me put Amazon up here, and I'll share with you what I've got, so you can all see. AMZN. Okay, here is my Amazon. Here's my main portfolio, and you'll see my overall balance is $103,405. Started with $5,000, and you can see 72. There's margin. Look, see, I'm all in, 100%. I'm full in. I believe in my stocks, my businesses. I'm holding, and I am very, very happy to do so. Right, is there a good buying opportunity? There is. There is. I am only owning the S&P, though, because of integrity for my channel, though. You all know how that works on this show. So just checking in on the extra channel. The extra channel, if you're watching what's going on, we are here with Amazon on the main channel. And there is Apple on the extra channel, which is behind the scenes. There will be the audio from Apple and all the presentations coming up very shortly. We're just waiting for that to start. If you want to watch both, the Lucas Aids are watching both. I can see them in both channels. Let's put some comments here on the screen from the extra channel, not to miss out. There's Zach from Uganda. Hi, Martin. How you doing? James 007. Let's see earnings beats and rocket S&P back to green, please. Both have beaten. Tim Rogers, hello Martyn. Martyn, did you see my last comment going through TSA? I'm running. Some of us have to work for a living. Just wanted to say, great show today. Thank you very, very much indeed. Did I see your last comment? I see this comment. I don't know which comment that would be, but you be safe if you are running, traveling today. Okay, let's come back to Amazon. Fantastic. Let me check in with Apple right now. We've got a way to go before Amazon starts. Let me check in on Apple. Here we go. We're getting some information now coming through. So let me go over and refresh this on the extra channel. I'll share with you what I'm doing. I'm running 2 streams at once. This is the extra channel. So if I go over to here, you will see me bring this up. Okay. So as I take you'll hear my microphone get a bit dim as I move away. Okay, here we go. This is the Apple earnings, and we've got, there we go. Let me check the audio. Unmute. There we go. It's coming through. Great stuff. Apple there. I'm going to leave the chart for a while, so we can watch the chart. There's nothing to share with you at the moment. Back here to the microphone, that we're all set there for the Apple earnings on the extra channel. Very, very good indeed. Very exciting evening. I've gone all in and I'm super excited. Hi, Mike on the extra. How are you? This is the first time I bought Amazon. Congratulations. Geo, where are you from? What country are you from? Tell me and I will speak your language. We have members in 63 countries and we speak in 14 languages. So there we go. All right, what country are you from? And I will speak your language. Now then, while we're waiting, we have a few minutes to go before the Apple earnings begins and a little bit longer to go before the Amazon earnings begin. Once the Apple earnings begins, I will be muted. They will not hear me anymore. I'm from China, but live in England. So what is your native language? So before we go into the earnings for Apple will be first on the extra channel. This is the extra channel, folks. So if you want to jump in there now. Oops. Oh, hang on a minute. I love it. I love a challenge. All right. I've got to do this again. It keeps challenging me. All right. Okay. Accounts. Don't know why it keeps doing this, but I'll do it again. Just bear with me a second. I've got to keep doing this every day at the moment. Thank you, Raya, for your subscription. Okay, let me continue that. Allow that. Continue to Stream Deck. Open. I don't quite know why it's being like this, but we're having these issues. Right, here is the extra channel. There you go. If you want to jump in to the extra channel and watch the Apple earnings, you can. Here on the main channel, we're doing the Amazon. Now then, just before, we've got about 5 minutes to go before I check audio with Apple. So what I'd like to do is, as we've got a lot of people here, as you know, I put a video out today, my road to $1 million live on the show. This is my portfolio. I'm worth $103,285, but I'm going to show you how I'm going to get to $1 million live on the show. So you can watch me do that in real terms in live, okay? But I also would like to raise millions of dollars for your favorite charity. It's something I want to do to help people, right? I just love helping people. It gives me a great thrill, right? For those of you who don't know, I was voted by Sir Elton John as the world piano man. This is my YouTube channel here. And I want to raise millions of dollars for charity. Now, I've already raised lots of money, but unfortunately, in the past, there's been credit card fees, charges and costs. Not from me. I've always done it for free, but there's always costs involved, okay? But now, But now we've got a wonderful thing that if I can get to 10,000 subscribers on my YouTube channel, I'm at 5,900. Can you see on the screen? If I get to 10,000, YouTube are going to turn on charitable giving. So all my ad revenue, all my concerts will go to charities. Now, if you help me, you can decide what charity you want me to do concerts for, and the money will go directly to your charities. So here is the music channel. There it is. I'll put it 3 times in the chat. All I ask you to do is simply become a subscriber. You don't have to watch my music, listen to my music. If you want to, you can hear me with my Vegas showgirls. I had a West End show. I got my own Vegas show. You can do all those things, but all I ask you to do is subscribe to me. Now, if you subscribe to me, it's free. Okay, it's free. If you then tell all your friends to subscribe to me, you can then come back and say, Martyn, I've just got you 100 subscribers. We would like you to do a fundraiser concert for cancer research or save the children or helping those in the war or whatever. I will do that for free. And the money that the videos and the concert raises will go directly to your favorite charity. Not me, no fees, no charges. YouTube now do charitable giving. So all you've got to do is subscribe. And if you do it, your name will come up on the screen. If you share your public subscriptions, they will. Okay? So if you'd like to do that, that would be amazing. So what I'm going to do now is I'm going to see what the YouTube count is. And if it changes, it's just gone up by 3. It's just gone up by 3. I'm going to share it. Oh, there we go. There's another one. There's another one. There's another one. We're trying to get to 10,000 subscribers. Here it is on the screen, okay, by the end of the year. Then I can start doing these events. So here we go. We're at 5,912. We were 5,909 a couple of moments ago. Right, we have about 3 minutes to go before I'm going to check the audio for the Apple earnings, and then we've got another half an hour before the Amazon earnings audio begins, and then we go quiet and listen into the audio. Right, so there you go. I want to raise millions of dollars for charity, your charity of choice. Oh, there's another one. There's another one. Absolutely amazing. Thank you. And another one. This is fantastic. Thank you so much indeed. I'll give you the link again on both channels. If you want to listen to my music, you can hear me do. I've got a video when I've got Paul McCartney on the screen with me. You can see me wearing my Elton John jacket when I did Candle in the Wind. You can see that, Lion King. You can see me do Phantom of the Opera. You can see me do special tributes to Joey, who died from Friends. Tribute to the King, the Queen, all fundraiser events. You can see all of that. If you want to listen to my music, please do. But all I want you to do really is to become a subscriber. There you go. All right, there's the link once again. Thank you very much, everybody who has done that. That's massive. Remember, it's not for me. If you don't subscribe, you're taking money away from charities. I want to do the whole thing for free. I just need your help to do it. Okay? Simple. And you can choose what charity you want me to do. All right? How cool is that? I just love doing it, right? I've got what I need in life. Now it's time to give back. I just need you to help me do it. Right. Okay. Let's have a look. Did the subscriber count move? Let's have a quick look. You didn't come back to me what your language was. Was it Chinese? 5,912, 5,913. Fantastic. We've gained 4 tonight then. That's amazing. Thank you ever so much, everybody. We're on the way. Check out the music if you want to, but that's not the reason for this. It's just so you can get me to 10,000. Right. Now then. Thank you, Mike. You are welcome. Lennart Mahler, thank you very much. Really appreciate it. And don't forget, if you tell all your friends to subscribe to me on the music channel, please message me on X or during the live show and say, Martyn, I've done this. 100 people now have subscribed to you because they're all my friends. We would like you to do a fundraiser to raise money for this charity. And as long as it's a registered charity, I will do it. Absolutely free of charge. And all the money will go to you. 100% ad revenue, super chats, everything, all to you. So all you got to do is subscribe and let me know what you've done. All right, good. That's pretty good, isn't it? Doesn't get better than that. Okay, let me go and check now the audio for Apple. We should be coming through now. Let me super chats, everything. Bring this up to date, all to you. So all you got to do is subscribe. I'm going to go and check the audio now. For... All right, good. That's pretty good, isn't it? Doesn't get better than that. Okay, let me go and check now the audio for Apple. We should be coming through now. Let me super chats, bring this up to date, all to you. So all you got to do is subscribe. I'm going to go and check the audio now for... All right, good. That's pretty good, isn't it? Doesn't get better than that. Okay, let me go and check now the audio for Apple. We should be coming through now. Let me super chats, bring this up to date, all to you. So all you got to do is subscribe. I'm going to check the audio now for... Good. That's pretty good, isn't it? Doesn't get better than that. Okay, let me go and check now the audio for Apple. We should be coming through now. Then super chats, everything's up to date, all to you. So all you got to do is subscribe. I'm going to check the audio now for... Good. That's pretty good, doesn't get better than that. Okay, let me go and check now the audio for Apple. We should be coming through now. Then super chats, everything's up to date, all to you. So all you got to do is subscribe. I'm going to check the audio now for... Good. That's pretty good, doesn't get better than that. Okay, let me go and check now the audio. Don't mean I don't love you, baby, I'm a little control. Okay. Okay, let me go and check now the audio. Don't mean I don't love you. Let's mute that quick. Okay, good. That's all good. We're fine there. Okay, Apple is just 10 minutes away. So in 10 minutes we will mute that. I will mute myself talking and we'll go over to the Apple earnings, okay? We're all good. And then we'll focus on the Amazon earnings here on the main channel. Brilliant. I have no friends. That's like me, Leonard. I live in a dark house. You do now. That's right. You do now. We have members in 63 countries, 14 languages. Amazon's down because of their report for some reason. I guess we'll find out soon. Same for the Microsoft, I guess. No problem at all. I'm not worried. Hi, Martin. Haven't seen you since we're at Nidaz. Sharon, under Michael's login. Mr. Elliott, haven't seen you since we were at Nidaz. Sharon, under Michael's login. M. Elliott, not sure I know what you mean. Sorry. Leonard, Amazon, their AOS is having problems as well as they are trying to get into the tech market. RG, thank you very, very much for that. Right. Amazon. Okay, let me do that. Let me switch back. Switch account, extra. Content. Live. 10 minutes to go before Amazon earnings starts. You're in the right place. Bear with me. Yeah. All good. Switch account. All good indeed. Keeping our eye on all the feeds, making sure everything is good for you. There we go. It's now coming back up. I like it. Welcome now. While we're waiting, we have 10 minutes to go before we can start Apple's earnings, and then Amazon will happen just after that. Let's see if this works. Okay, let me add this then. Okay, just got to add this. We're having some wonderful technical issues, but it's all part of the fun and games. Kaylin, thank you so much indeed for your support. Right, now then, if you're watching me here on the main channel, here is Alpha Spread. That is the software that I use. I know the CEO. It's the best software to review stocks, I believe. The best AI software. I use it all the time. It's how I know what I know about stocks. All my members can use it for free. And if you are a member, you can get a discount better than what Bloomberg CNBC can give you. It's the best discount. It basically makes my membership for free. Okay, there it is. That's on the extra channel and the main channel. Here is the music channel we were just talking about on both channels. There it is. Go and subscribe to the music channel. We're trying to give away millions of dollars in charities. If your charity, all you got to do is pick one and tell me what you want me to do. Do a live concert for your favorite charity. Just get me to 10,000 subscribers and I will do that for you. If you want to become a member of our channel, 98% of our live viewers on a regular show are members. There is the membership link. If you want to follow me on X, there is the X account. I post all my trades there, and that's where you can communicate with me and say, "Hey, Martyn, I got 100 subscribers for you. Can you do a fundraiser for cancer research or help those in the war, save the children, whatever it might be?" If you want the newsletter and you want the birthday and Christmas card, there it is. And if you want Discord, we have training. We have scalp trading training, but we provide it for free. We don't charge like other YouTube channels. We give it for free. If you click on the Discord and you become a member, you won't see anything at all until you do one of two things. Either you become a subscriber to Discord, then all the channels become available, or you become a YouTube member and you get it for free. But if you are a YouTube member, you need to join me on a live show and you need to give me your username in the chat so I can go and find you and upgrade you. I do it manually to protect it and make sure it's done properly and all the rest of it, to make sure that you know how it all works. Okay, it doesn't happen automatically. When is the Amazon earnings? Tout W. The Amazon earnings is in half an hour. Half an hour. We are 7 minutes away from the Apple earnings. 7 minutes away. Apple earnings will start first here on the extra channel. There is the link in the main channel to the extra channel, and everybody on the extra channel, you already know you're already there because you're looking at the Apple chart on the screen. So the Apple earnings will start 30 minutes before the Amazon earnings. And when the Apple earnings begins, I will stop talking and I will be muting myself so Tim Cook and the team can take over from me. Kind of makes sense? Absolutely. All right. Okay. Why is the market down today? I explained it all today in my video, which was the road to $1 million. It's rotation out of mega caps into small caps just to drive the market down to buy it back. It's a bullish sign. People often think when stocks go down, it's bearish. It's not. It's going to come straight back up again. That's why I'm all in. It's very important to understand that. Right, Leah. I need, how am I going to do this? How can I do this? I suppose, how can I do this? No, that's all right. I don't need anything. It's fine. I can manage it. I was just thinking to myself, don't worry about me. I'm talking nonsense. Right, we got 5 minutes to go. So I'm just going to check this. No, that's all right. Okay, check that there. I was just thinking. Okay, we're good. Right, Apple earnings. I'm now going to listen in. And the moment Apple earnings begins, I'm going to start it on the extra channel. I am going to mute myself so you won't hear me until the end of the earnings. And we'll then be taking over here with the main channel with the Amazon earnings. Does that make sense? Okay. All right. We've got just 3 minutes to go. Let's listen in to Apple. Yeah, I'm fine now, Leah. Thank you. Right, let me unmute this. We want to be very careful for copyright. Apple is terrible with things like that. Well, they're not terrible. It's a good thing, but I just have to keep checking. So they will probably be a couple of minutes late. Most of these earnings are a couple of minutes late. Don't be worried about that. That's how it goes. So if you just tuned in, click subscribe, ring the bell, and tap the like button as well. It really, really helps. If you've just tuned in and you missed what I said, we're trying to raise millions of dollars for charity, your charity, the charity that you want. You can ask me to do on my music channel. I'm going to do fundraiser concerts. I'm the world piano man, and I'm going to do fundraiser concerts where all the money that gets raised through the YouTube will go directly to your registered charity. If you want to help me with that, there is the music channel link. Click on that. Tell all your friends. And if you get a number of people to do it, come back to me and say, hey, Martyn, we've got 100 people have subscribed to you. You're now at 10,000 subscribers. That's when YouTube turn it on. It's called charitable giving. Could you do a fundraiser concert for my favorite charity? And I will do it for free. And all the money raised through YouTube will go directly to your favorite charity. And if you subscribe now, your name will come up on the screen. If you are a public subscriber, it will show. And that would be amazing. Right, 3 minutes to go. Let me check in on Amazon, Apple. Still playing audio. After Apple begins, we'll switch over to Apple will take over on the extra channel. This is the extra channel is this link I'm going to give you now. And everybody on the extra channel, here is the main channel. Okay, there you go. When the Apple earnings begins in the next couple of moments, we will be muted there and you'll be listening into the earnings. And here on the extra channel, on the main channel, sorry, we'll be waiting for the Amazon earnings to begin. All right? Hopefully that all makes sense to everybody. Okay. Not that long to go now. 2 minutes. It'll probably be 2 minutes late. That very often is what happens, but that's not a problem. My portfolio is now coming up. There's my portfolio. Hit the bottom. I'm happy. I'm all in. I'm now worth 103,455. I've never shorted a stock. I don't do options. You all know that. Okay. Just moments to go. We've got 61 watching on the main channel, and we've got 31 watching on the extra. We've probably got some watching on both because our Lucas aides, our army, are massive supporters of everything that we do, and they're probably watching both, which is absolutely wonderful. Thank you very much indeed. Right, 1 minute to go. Oh, John Shah just subscribed to the extra channel. The extra channel is members only. It's viewable by everybody. You can listen in, watch and everything, but it is only, you can only chat in the extra channel if you are a member. It's only 99 cents. The reason for that is it's our live trading channel. We're live in the trading channel 12 hours a day, and we don't want bots and scammers and people coming in making up stuff. So we put a paywall up of 99 cents, and that's all it took to stop all the idiots. So it just shows you, doesn't it? Oh, I know how to get rich. Can you afford 99 cents? Well, no. Okay, then bugger off, back down your hole again. Right, I'm listening into Apple. Okay, when the audio comes, I will switch. I will mute myself. And we will bring you the audio. Okay? So stand by, Apple audience on the extra channel. And everybody here on the main channel, stay where you are if you want Amazon earnings. Fantastic. Woo! What a night. 2 earnings at once. It's all about how hard you can work. Work harder than anyone else. Never give up. Love life, and you'll always win. That's it. Easy. Life isn't fair. Life isn't fair. Life is bloody unfair. When you realize that, and just focus on what you're doing, it all works out. Never give up. Thank you, James, for the love on TikTok. I can see you, mate. Nothing goes unnoticed. Here we go. Okay, now Apple, now the extra channel should be able to be hearing the show now, and they shouldn't hear me anymore. Capital allocation and future business outlook, including... Fantastic! I love when a plan comes together. So the extra channel is loving it. They're watching the earnings now for Apple. That's great. Yes, we did it. 2 shows at once. Right. So this is what's happening now on the extra channel. This is what's happening right now. They're listening in to the Apple earnings. This is behind me. Look, this is behind the scenes. This is me from the back. They're watching the charts. They're also listening in to Tim Cook and the team. So that's all good, as you can see there. Isn't that pretty? Isn't that smart? I'm loving it. I'm loving it. All right. So there you go. Very, very good. I'll put a little message. Is it all working well? Love you all from the main channel. There you go. Loving it. I'm loving it. Germany. There's Tim Cook, listen in.
We set an all-time revenue record in services, which grew 14%.
All right, but we're not listening into that. We're letting them do their thing. That's what the extra channel's for. We're focused on the on Amazon, so we'll let that just run now throughout the event. And when it's over, I will be able to just shut that down. So Apple, we can shut that down. Now, Amazon, we've got 27 minutes to go before Amazon, so all we can do is wait for that. This is what you're going to see in a moment. Up on this screen, you're going to see this chart here, and the Amazon earnings once it begins, okay? So you're in the right place. If you would subscribe to the channel and smash the like button, that would be great. Which channel has more likes? Vaz, okay, let's have a look. Which channel has more likes? So far, we have 56 for Amazon, and we have 14 for Apple. I can't talk now, though, because they're doing the thing, right? So I've got to leave people to their own devices. So I need you, James. I need you to sort that out. All right. Whoa. Okay. Yeah. Awesome. Very good. So exciting to see it all works. Right. Okay. Imagine if I get more people watching Apple, be like, well, that's weird. People don't want to hear from you or see you. Prefer the back of your head. I mean, that's what you're saying, really. That's what you're saying. Anyway, it's all good. Just going to keep checking there. Okay, you usually compete with other channels when we have double earnings. You usually compete with other channels. Yes, let's go. 5% SPY at open, please. Martyn, I like the studio setup you did for your show. Thank you very, very much indeed, Lucas. Just make all stocks go up and to the right forever, then everybody wins. Well, they don't really. If the stocks keep going up one way, it actually wouldn't work. unfortunately. It sounds good, but it wouldn't work that way. All right, we're looking good. Now then, let's have a breather. We can relax because we've got 15 minutes before we get the audio check for Amazon. Chris Kojak, thank you for your subscription. Thank you ever so much, everybody. James, I love all the love on the screen. Thank you so much indeed. 2,900 likes on TikTok tonight. That's very, very nice. We love all that. Okay. So, 56 watching. This is what's going on the extra channel. Let me share with you what's going on the extra channel right now. They are doing, it's like it's a different person. Me at the back of the room sounds like
Photos
this.
App, new customization options for the home screen, messages over satellite, and the introduction of Apple and
So that's what's going on the extra channel right now behind me. Pretty cool, right? So let's leave that alone. We can't be dealing with that. Okay. Just small, just make all stocks go up. There we go. Best investor of all time is Bezos' ex-wife. Very good. I'm so impressed you managed to run both channels at the same time on your own. Thank you very much indeed. Thank you very much indeed. It's yeah, I will sleep well. I will sleep well when I finally relax and let my brain go. Right? But anyway, there you go. It's looking very good. I'm loving it. I'm loving it, loving it, loving it. All right. Yeah. No, I won't. Shall I interrupt? No, I won't interrupt. You can't interrupt. Tim Cook's talking. Right, okay. We're just waiting now for Amazon to perform. You can see the stock is still falling down. Let me give you the extra charts now. There you go. Amazon's going down there. Amazon, you can see. And this is where we'll get the broadcast. It'll change and give us the slides at 1:15. So we've got like about 6 minutes to go before the visuals change. And then we can start to get our audio ready. Until then, we're just waiting. I don't even think insider trading world would be worthwhile nowadays. Markets don't react normally to news anymore. Remember the old commercial? It's shake and bake. And I helped. Shake and bake. Do the shake and vac and put the freshness back. Do the shake and vac and put the freshness back. Woo. Yeah, something like that. Yeah, I know. You know, I was going to subscribe to your music channel. I'm not anymore. That was rubbish. What was that? What was that? I mean, seriously, what was that? Anyway, can anyone remember what my music channel was on? Mike, can you remember? Was it 5,912? Let's go and have a little look. What is it now? Did we get anybody else? Amazon going to fly after earnings? I think so too. I think so too. 5,913. Yes, we got another one. Yes. First hurdle is 6,000. That's the first hurdle, of course. That's what we want to do. But we're on the way. We're on the way. Keep on going. Keep on swimming. Keep on swimming. Okay. 5 minutes to go, and we'll get information from Amazon. Sorry to ruin your show, Martin. I always do. Yes, you always do, Mike, but don't worry about it. It's fine. It's all good. How's Apple getting on? Shall we listen in?
The upcoming awards event. During the quarter, we also
There's the Apple earnings cracking on, doing well. We're here on the main channel waiting for Amazon, of course. 4 minutes to go and I can refresh the screen. Apple drop, yes. All mega caps have dropped. It's a rotation. It's an opportunity. That's all it is. For those that are brave, of course. So it's all good. I'm loving it. Anyway, I am certainly loving it. We're keeping our eye on everything. In 2 minutes, we'll be able to refresh Amazon's screen and bring in the audio, which we're looking forward to doing in just a moment. Yeah. 2 minutes to go, and we'll be able to refresh the screen. Loving this. So I've got a video I put out today. It's become our biggest ever video, fastest ever video. We're only a small channel, and it's done 2,000 views in the first 2 hours. It's my road to $1 million. I hope you get the chance to see it. It explains all about margin, how that works. But you have to watch the whole thing. People get impatient and they go, I want all the information in the first 30 seconds. Otherwise, I can't be bothered. And I go, well, sorry about that. That's just the way it is. Take it or leave it. And I go, I'll leave it then. Okay, that's all right then. Okay. 2 minutes and I'll be able to refresh the sound. Why is Amazon stock crashing? It's a rotation, Mohammed. It's perfectly fine. The earnings was fine because it's bullish. It's a bullish signal. Wall Street have dumped to buy back. It's great. That's why I went all in today on margin. That's why I'm all in on the stocks. This is good. It's good. It's the last drop before the rally. It's for the brave. Faint-hearted, those that are running away now, that's fine. I am picking up all your shares. That's all the stock market is. It's a transference of wealth. People that don't understand it, haven't done the research, dump it. Wall Street basically scare the hell out of you, and then you end up having to buy back higher. How many people have had that happen to them? Happens all the time. Right, 1 minute to go, and I'll be able to refresh this screen, and we'll see what presentation we have from Amazon, and then we are ready to build up. Rob Brennan, me, yep. It happens all the time. People get fearful, they dump the stock. That's the game. You've got to learn how the game works. If you don't know how the game works, you shouldn't be playing it. Who wants to be a millionaire? When is earnings starting? The earnings is starting in exactly 15 minutes. Steve W. Yep, I love it. Me says, I don't think I have enough time or money to become a millionaire. Money isn't everything. No, it isn't. You're absolutely right. You can't take it with you anyway, Mike, can you? You're still here doing the same stuff you would be doing if you was a millionaire, right? Yeah. He's going, no. If I was a millionaire, I'd be sat on a boat right now. Well, you can do that anyway. You could just go down to the local boating lake and just hire one for 10 minutes. That's what I do. I don't own a boat. Don't own boats. That's a waste of time. Just rent one for half an hour. All right? What were the results for Amazon and Apple? Beat on both. Beat on both. It's just a rotational sell-off. That's all it is. Amazon dropped because of their weaker than expected sales outlook. Yes, but it was still a comfortable beat. It's all to do with inflation rates coming down. We're at a pivotal point. This is perfect. Do you invest in S? I don't know what S is, but I am fully invested. Yes. Right. Okay. Let's refresh the screen. Let's see what we get. Here we go. Play. There we go. There we go. We now have the Amazon slides. There we go. We have the Amazon slides up. We're all rocking and rolling. That looks good. I'm loving it. We've got slides, projections, and everything else from Amazon. Fantastic. We're all good. Now we just got to wait 15 minutes before it starts. Good. Apple selling off. Final sell-off. How is my portfolio doing? 103,522. Yeah, we're fine. Amazon, yeah, we're fine. Look at it holding now. This is so good. This is a perfect portfolio because what we've got Amazon selling off, Apple selling off, and yet my portfolio has bottomed. This is consolidation now, rotation, and this is the road to $1 million. Perfect. Very, very happy. I'm holding my ground, not selling a single share. Very, very exciting. Very exciting. Okay. Weak and expected sales outlook just means they'll beat again next time. There is that way of looking at it. Maybe Martyn would do you a special edition golden Martyn Lucas mug. If I was a millionaire, I would still be sat drinking a cup of tea, but from a solid gold mug. You know what? Rob Brennan's dead right. I can definitely make you a mug, a golden mug, right, with your name on it and everything. I can definitely do that. Okay, portfolio is stabilizing, coming up, despite everything selling off. Marvelous. Why is that happening? Because all the other smaller caps are rotating out now of the Russell into the smaller caps. There's still obviously small and large caps in the S&P. They're all very large companies, but much better than the Russell. Money's coming out of there, and when we get the the money coming back into the megas, which it will over the next week or so, you will see my portfolio flip and explode. I've got no real doubt about that. You can see, look, there's a defensives, J&J, Coca-Cola. All the money's going here, safe, earning dividends, and it will all trim to go back into the megas very, very shortly. I'm loving it. All right. Okay. Let's have a quick check with everything. So let's have a quick check. Apple is taking a hell of a dive. That's all right. Listen to Apple.
The iPad installed base has continued to grow and is an...
There's Apple doing very nicely indeed. Good audience there. Let me say something. Hello from the main channel. Please tap the like button and click subscribe. We're having a competition between our channel and your channel. Smash the like. Thank you. There you go. Just a little bit, eh? Just a little bit. Be a little bit cheeky.
Second generation, the Watch SE, and the first
Hello
Watch
from the main
Ultra.
channel. Please tap the
Apple
like
Watch
button and click
continues to
subscribe.
attract new
We're having a
customers,
competition
with almost
between our
two-thirds of
channel
customers
and your
purchasing
channel.
an Apple
Smash
Watch
the
during
like.
the quarter,
Thank you.
being new to the product.
There you go. You got to do a little bit, ain't you? You got to do a little bit. Let's see. It was at 14 likes. Let's see if it goes up now. There you go. 14 to 19. Check it out. Right. 10 minutes to go. Let's have a look. Amazon looking good. There's Amazon. Looking good. You watch tomorrow morning. Cannot wait. Very, very exciting. Welcome, everybody, to the Amazon earnings. If you've just tuned in, we want to get 100 likes on the video so we can get suggested on YouTube. So tap the like button. That'll be great. Should we have some funky music? Let's do it. Let's have some fun here today. We got 60 watching. 60 watching. So the best we can get is 30 likes because the people in India are not signing to Google. Just the way it is. It's always been that way. So 30 likes is the most we're going to get. You ready? You ready? 8 likes in 5, 4, 3, 2, 1. Let's get to 30. 38. Boom! We smashed it. That'll do for me. Thank you very much. Thank you very much indeed. We'll take that. We'll take that. That'll do. That'll do, donkey. That'll do. All right, here we go. And here we go. What we got here? If based upon market caps, probably at least 30 to 40% in the Mag 7. Just as I expected. Here is Sensei Crypto. How are you, Sensei? If you want a chart done for you, specifically, he will do it for you on the Sunday show. The Sunday show, Sensei will do charts for you. He's here live in our stream right now. If we go to the homepage of the channel, you can see Sensei is there on Sunday. Upcoming live streams. Join Sensei. He'll do a chart for you. If you want the link for it right now, here's the link. Bookmark it. You can go there right now and leave a comment and say, hey, Sensei, can you do me a chart on XYZ? And he'll go, all right then, when he sees you on Sunday, that is. All right, there you go. That is how we do that. Thank you very much, Sensei, for popping in. Sensei Crypto, congratulations on both streams. Thank you, mate. Thank you very much indeed. It's quite a challenge. Chance of a rally soon, Sensei, on SPY. Hi. Martin, did you know if 1 billion Indians and 1 billion Chinese people disappear tomorrow, they still have the highest and second highest population? Is that right? Bloody hell. I'm a bit skeptical on the SPY at the moment. I will analyze more on my Sunday show. Past few weeks, I've been saying we were overextended. Well, we've sold the megas right now, but the overall portfolio is strong. The overall S&P is strong because the mid-size caps are holding, and all 76% are beating on earnings, as well as the mags are all beating on earnings as well. So we've got a consolidation period, a rotation, and it's holding. And when the mags come back in again, which they will because they're all oversold now, my portfolio is going to be up 3 times the rate of the S&P, because when you're in margin as much as I am, I'm going to 3x the market. That'll probably start by Monday of next week. If I'm lucky, it might start after hours tonight, but it's a little bit early. Anyway, 3 minutes to go. Amazon's starting to come up. Oh no, that's not good news, Sensei, said Rob Brennan. I wanted to hear it's going to 2x by tomorrow. I know. I might as well sell all my shares. It's not going to make me a millionaire by tomorrow. That's rubbish. I can't bloody believe it. I might as well pack up and go home. I couldn't agree more. Apple is bouncing back up again quickly now. Amazon is also coming up, and my portfolio is holding steady. Look at that. Look at that. Lovely. Lovely, lovely, lovely. Okay. I knew the worst day, today would be the worst day of the new position of margin. It always is. Always is. How many times do we buy and then on day one we go, oh my God, everything's down. It always happens. Questions?
Great. Thank you very much for taking my question. Maybe, Tim, if we start with you, I thought some...
There we go. We're doing questions on the extra channel right now. We've got 5 minutes to go. So I need to keep my ear into how am I going to do that? How am I going to keep my ear in? Right, I know what I need. I need to go and borrow my wife's phone. That's what I need. Yeah, that's what I need, because I'll listen in, and the moment the earnings ends on Apple, I'll bring everybody back into main. Right, we've got 5 minutes. Let me go grab my wife's phone. Okay, there we go. So I've got, I can listen in now to, I can listen in now to the Apple on a separate device that's not being pumped out to you guys, because that would be annoying, right? There we go. So let me bring that up. Apple earnings. How long have we got? 3 minutes. Okay, here we go. Okay, we are now just 2 minutes to go. I'm listening into the Apple earnings on my other phone. Okay, let's check now where we are. Okay, let's refresh the screen. Okay, we've got 2 minutes to go. And as soon as we get... how does margin work? Okay, I've just been asked, how does margin work? If you go and watch this video here, below the video, you will see at the end of the video, this is my road to $1 million. This video here, it tells you all about margin. All right, so let me share with you. Copy. There's the link. All right, so there you go. There is the video. It's the $1 million video, this one here. And if you watch right to the end, if I just fast forward it, here at the end, it'll tell you about the margin here. If you listen in here. Here, I'll put more videos that I'll think you'll find useful. There. Down here, I'll put some more content you'll find useful too. Leave me your thoughts below. I'd love your opinion and thoughts and comments. I will reply to every one of my members. Until next time, as always, join me on the road to $1 million. Okay, there you go. That makes sense? If you watch to the end, you will hear that. All right? Okay. We've got 30 seconds to go before the earnings begins. It will probably be 1 or 2 minutes late. Always is. This is the Apple earnings going on right now.
Component price inflation and...
Okay, so let's come back to Amazon earnings right now. Excuse me, Apple earnings right now. Amazon earnings. Bloody hell, I'll get it right in a minute. Here we go. Right, we'll listen in now. They're playing music. When they stop playing, they're normally about a minute or two late. It's now 30 seconds late. So click subscribe, ring the bell. I'll be going quiet in a few seconds. Please tap the like button. Just listening in now. Just waiting for it to begin. Any moment now.
Everyone, and welcome to the Amazon.com second quarter 2024 financial results teleconference. At this time, all participants are in a listen-only mode. After the presentation, we will conduct a question-and-answer session. Today's call is being recorded, and for opening remarks, I will be turning the call over to the Vice President of Investor Relations, Dave Fildes. Thank you, sir. Please go ahead.
Hello, and welcome to our Q2 2024 financial results conference call. Joining us today to answer your questions is Andy Jassy, our CEO, and Brian Olsavsky, our CFO. As you listen to today's conference call, we encourage you to have our press release in front of you, which includes our financial results as well as metrics and commentary on the quarter. Please note, unless otherwise stated, all comparisons in this call will be against our results for the comparable period of 2023. Our comments and responses to your questions reflect management's views as of today, August 1st, 2024 only, and will include forward-looking statements. Actual results may differ materially. Additional information about factors that could potentially impact our financial results is included in today's press release and our filings with the SEC, including our most recent annual report on Form 10-K and subsequent filings. During this call, we may discuss certain non-GAAP financial measures. In our press release, slides accompanying this webcast, and our filings with the SEC, each of which is posted on our IR website, you will find additional disclosures regarding these non-GAAP measures, including reconciliations of these measures with comparable GAAP measures. Our guidance incorporates the order trends that we've seen to date and what we believe today to be appropriate assumptions. Our results are inherently unpredictable and may be materially affected by many factors, including fluctuations in foreign exchange rates, changes in customer demand and spending, including the impact of recessionary fears, inflation, interest rates, regional labor market constraints, world events, the rate of growth of the internet, online commerce, cloud services, and new and emerging technologies, and the various factors detailed in our filings with the SEC. Our guidance assumes, among other things, that we don't conclude any additional business acquisitions, restructurings, or legal settlements. It's not possible to accurately predict demand for our goods and services, and therefore our actual results could differ materially from our guidance. And now, I'll turn the call over to Andy.
Thanks, Dave. Today we're reporting $148 billion in revenue, up 11% year over year, excluding the impact from foreign exchange rates. Operating income was $14.7 billion, up 91% year over year, and trailing 12-month free cash flow adjusted for equipment finance leases was $51.4 billion, up 664% or $44.7 billion year over year. As I think about what matters to customers long term and therefore to Amazon, there's a lot to like about what we're seeing. Starting with AWS, year-over-year revenue growth accelerated again from 17.2% in Q1 to 18.8% in Q2. We're continuing to see three macro trends drive AWS growth. First, companies have completed the significant majority of their cost optimization efforts and are focused again on new efforts. Second, companies are spending their energy again on modernizing their infrastructure and moving from on-premises infrastructure to the cloud. This modernization enables builders to save money, innovate at a more rapid clip, and drive productivity in most companies' scarcest resources, developers. This is the flip I've talked about in the past, where the vast majority of global IT spend today is on-premises, and we expect that to keep inverting over time. With the broadest functionality, the strongest security and operational performance, and the deepest partner ecosystem, AWS continues to be customers' partner of choice and the biggest beneficiary of this flip from on-premises to the cloud. And third, builders and companies of all sizes are excited about leveraging AI. Our AI business continues to grow dramatically with a multi-billion-dollar revenue run rate despite it being such early days. But we can see in our results and conversations with customers that our unique approach and offerings are resonating with customers. At the heart of this strategy is a firmly held belief, which we've had since the beginning of AWS, that there is not one tool to rule the world. People don't want just one database option or one analytics choice or one container type. Developers and companies not only reject it, but are suspicious of it. They want multiple options for flexibility and to use the best tool for each job to be done. The same is true in AI. You saw this several years ago when some companies tried to argue that TensorFlow would be the only machine learning framework that mattered, and then PyTorch and others overtook it. The same one model or one chip approach dominated the earliest moments of the generative AI boom, but we have a lot of data that suggests this is not what customers want here either. And our AWS team is determined to deliver choice and options for customers. You can see this philosophy in the primitive building blocks we're building at all three layers of the Gen AI stack. At the bottom layer, which is for those building generative AI models themselves, the cost to compute for training and inference is critical, especially as models get to scale. We have a deep partnership with NVIDIA and the broadest selection of NVIDIA instances available, but we've heard loud and clear from customers that they relish better price performance. It's why we've invested in our own custom silicon in Trainium for training and Inferentia for inference. And the second versions of those chips, with Trainium coming later this year, are very compelling on price performance. We are seeing significant demand for these chips. These model builders also desire services that make it much easier to manage the data, construct the models, experiment, deploy to production, and achieve high-quality performance, all while saving considerable time and money. That's what Amazon SageMaker feature called HyperPods that changes the game in networking performance for large models. And we're increasingly seeing model builders standardize on SageMaker. While many teams will build their own models, lots of others will leverage somebody else's frontier model, customize it with their own data, and seek a service that provides broad model selection and great generative AI capabilities. This is what we think of as the middle layer, what Amazon Bedrock does, and why Bedrock has tens of thousands of companies using it already. Bedrock has the largest selection of models, the best generative AI capabilities in critical areas like model evaluation, guardrails, RAG, and agenting, and then makes it easy to switch between different model types and model sizes. Bedrock has recently added Anthropic's Claude 3.5 models, which are the best performing models on the planet, Meta's new Llama 3.1 models, and Mistral's new Large 2 models. And Llama's and Mistral's impressive performance benchmarks and open nature are quite compelling to our customers as well. At the application or top layer, we're continuing to see strong adoption of Amazon Q, the most capable generative AI-powered assistant for software development and to leverage your own data. Q has the highest known score on acceptance rate for code suggestions, but it does a lot more than provide code suggestions. It tests code, outperforms all other publicly benchmarkable competitors on catching security vulnerabilities, and leads all software development assistants on connecting multiple steps together and applying automatic action. It also saves development teams time and money on the muck nobody likes to talk about. For instance, when companies decide to upgrade from one version of a framework to another, it takes development teams many months, sometimes years, burning valuable opportunity costs and churning developers who hate this tedious, though important work. With Q's code transformation capabilities, Amazon has migrated over 30,000 Java JDK applications in a few months, saving the company $260 million and 4,500 developer years compared to what it would have otherwise cost. That's a game changer. And think about how this Q transformation capability might evolve to address other elusive but highly desired migrations. During the past 18 months, AWS has launched more than twice as many machine learning and generative AI features into general availability than all of the other major cloud providers combined. This team is cooking, but we're not close to being done adding capabilities for our customers. Base. For perspective, we've added over $2 billion in advertising revenue year over year and generated more than $50 billion in revenue in the trailing 12 months. Sponsored ads drive the majority of our advertising revenue today, and we see further opportunity there. Even with this growth, it's important to realize we're at the very beginning of what's possible in our video advertising. In May, we made our first appearance at the upfronts, and we're encouraged by the agency and advertiser feedback on the differentiated value we offer across our content, reach, signals, and ad tech. With ads in Prime Video, the exciting opportunity for brands is the ability to directly connect advertising that's traditionally been focused on driving awareness, as is the case for TV, to a business outcome like product sales or subscription signups. We're able to do that through our measurement and ad tech so brands can continually improve the relevance and performance of their ads. While ads have become the norm in streaming video, we aim to have meaningfully fewer ads than linear TV and other streaming TV providers. And of course, for customers preferring an ad-free experience, we offer that option for an additional $2.99 a month. In our stores business, we saw growth of 9% year over year in the North America segment and 10% year over year in the international segment. A few notes on our North America revenue growth rate. First, last quarter's leap day added about 100 basis points of year-over-year growth. Second, we're seeing lower average selling prices, or ASPs, right now because customers continue to trade down on price when they can. More discretionary higher ticket items like computers or electronics or TVs are growing faster for us than what we see elsewhere in the industry, but more slowly than we see in a more robust economy. And our continued faster delivery speed is earning us more of our customers' everyday essentials business. Third, our seller fees are a little lower than expected given the behavior changes we've seen from our latest fee changes. While some of these issues compress short-term revenue, we generally like these trends. While consumers are being careful on price, our North America unit growth is meaningfully outpacing our sales growth as our continued work on selection, low prices, and delivery is resonating. So far this year, our speed of delivery for Prime customers has been faster than ever before, with more than 5 billion units arriving the same day or next day. As more customers experience our fast delivery, they look to Amazon for more of their shopping needs, and the continued acceleration of our everyday essentials business is an example of this phenomenon. On seller fees, lowering apparel fees has spurred substantial year-over-year unit growth in apparel. And the incentive we've given sellers to send their items to multiple Amazon inbound facilities so they can save money where they save us effort and money is getting more traction than we'd even hoped. These collective developments will benefit customers in the form of better selection, lower prices, and faster delivery speed. There's no shortage of ideas aimed at improving the experience for stores customers. For instance, we're adding even more value to Prime, recently introducing free restaurant delivery in many of our geos, expanding Amazon's Pharmacy RX Pass to Medicare members. This is a benefit that gives subscribers all-you-can-consume access to the most common generic medications for just $5 a month, and offering a grocery subscription to help save on grocery items when shopping our US and UK fresh stores. As we pursue these initiatives, we remain focused on lowering our cost to serve. We have a number of opportunities to further reduce costs, including expanding our use of automation and robotics, further building out our same-day facility network, and regionalizing our inbound network. With more optimal inbound inventory placement, we expect to enable faster speeds, consolidate more orders in one box, and reduce inventory transfers once items reach a fulfillment center. These cost improvements won't happen in one quarter or one fell swoop. They take technology and process innovation with a lot of outstanding execution, but we see a path to continuing to lower our cost to serve, which, as we've discussed in the past, has very meaningful value for customers in our business. As we lower our cost to serve, we can add more low ASP selection that we can support economically, which, coupled with our fast delivery, puts Amazon in the consideration set for increasingly more shopping needs for customers. A few other comments about areas in which we're investing. We remain very bullish on the medium to long-term impact of AI in every business we know and can imagine. The progress may not be one straight line for companies. Generative AI especially is quite iterative, and companies have to build muscle around the best way to solve actual customer problems. But we see so much potential to change customer experiences. We see it in how our generative AI-powered shopping assistant, Rufus, is helping customers make better shopping decisions. We see it in how our AI features that allow customers to simulate trying apparel items or changing the buying experience. We see it in how our generative AI listing tool is enabling sellers to create new selection with a line or two of text versus the many forms previously required. We see it in our fulfillment centers across North America, where we're rolling out Project Private Investigator, which uses a combination of generative AI and computer vision to uncover defects before products reach customers. We see it in how our generative AI is helping our customers discover new music and video. We see it in how it's making Alexa smarter. And we see it in how our custom silicon and services like SageMaker and Bedrock are helping both our internal teams and many thousands of external companies reinvent their customer experiences and businesses. We are investing a lot across the board in AI, and we'll keep doing so as we like what we're seeing and what we see ahead of us. We also continue to like the progress in Prime Video. Our storytelling is resonating with our hundreds of millions of monthly viewers worldwide, and the 62 Emmy nominations Amazon MGM Studios recently received is another supporting data point. We recently debuted titles like Fallout, the second most watched original title ever for Prime Video, The Idea of You, which attracted nearly 50 million viewers worldwide in the first 2 weeks on Prime Video, and Season 4 of The Boys, which reached number 1 on Prime Video in 165 countries in its opening 2 weeks. And we continue to see momentum in live sports. We recently announced 11-year landmark deals with the NBA and the WNBA. When combined with our original films and shows, partner streaming services, licensed content, and rent-or-buy titles, Prime Video continues to evolve into the best destination for streaming video. And for Project Kuiper, our low Earth orbit satellite constellation, we're accelerating satellite manufacturing at our facility in Kirkland, Washington. We've announced a distribution agreement with Vrio, who distributes DirecTV Latin America and Sky Brazil, to offer Project Kuiper's satellite broadband network to residential customers across 7 countries in South America. And we continue to field significant demand for the service from enterprise and government entities. We expect to start shipping production satellites late this year and continue to believe this could be a very large business for us. I could go on, but we'll stop here. There's a lot to feel optimistic about over the next several years, and the team collectively remains focused on continuing to invent and deliver for our customers and the business. With that, I'll turn it over to Brian for a financial update.
Thanks, Andy. Let's start with our top-line financial results. Worldwide revenue was $148 billion, an 11% increase year over year, excluding the impact of foreign exchange. This equates to a $1 billion headwind from foreign exchange in the quarter, which is about $300 million higher than we'd anticipated in our Q2 guidance range. Worldwide operating income nearly doubled year over year to $14.7 billion, which was $700 million above the high end of our guidance range. Across all of our segments, we remain focused on managing costs in a way that allows us to continue innovating and investing in areas that we think could move the needle for our customers. Starting with the North America and International segments, customers continue to respond positively to our focus on low prices, broad selection, and fast shipping offers. We delivered at our fastest speeds ever so far this year, which helps drive strength in areas like our everyday essentials. These include items like non-perishable foods, as well as health, beauty, and personal care items. And Prime members continue to increase their shopping frequency while growing their spend on Amazon. Overall unit sales grew 11% year over year, which is consistent with our growth rates in Q1 after you adjust for the approximately 100 basis point impact of leap year. North America segment revenue was $90 billion, an increase of 9% year over year. And international segment revenue was $31.7 billion, an increase of 10% year over year, excluding the impact of foreign exchange. North America segment operating income was $5.1 billion, an increase of $1.9 billion year over year. Operating margin was 5.6%, up 170 basis points year over year, and down 20 basis points quarter over quarter. If we look at profitability of the core North America stores business, we actually improved our margin again quarter over quarter in Q2. The overall North America segment operating margin decreased slightly due to increased Q2 spend in some of our investment areas, including Kuiper, where we're starting to manufacture satellites we'll launch into space in Q4. We saw improvements in our cost to serve, driven by our efforts to place inventory more regionally, closer to where our customers are. This resulted in more consolidated shipments with higher units per box shipped. We also saw packages traveling shorter distances to customers, and this also led to better on-road productivity in our transportation network. Our international segment was profitable again in Q2, with operating income of $300 million, an improvement of $1.2 billion year over year. Operating margin was 0.9%, up 390 basis points year over year. This increase is primarily driven by our established countries as we improve our cost structure, with better inventory placement and more consolidated shipments. Additionally, our emerging countries continue to expand their customer offerings, leverage their cost structure, and invest in expanding Prime benefits. We are pleased with the overall progress of these countries as they make strides on their respective paths to profitability. Advertising remains an important contributor to profitability in the North America and international segments, and we saw strong growth on an increasingly larger revenue base this quarter. We continue to see opportunities that further expand our offering in areas that are driving growth today, like sponsored products, as well as newer areas like Prime Video ads. Moving next to our AWS segment, revenue is $26.3 billion, an increase of 18.8% year over year, excluding the impact of foreign exchange. AWS now has an annualized revenue run rate of more than $105 billion. During the second quarter, we saw continued growth across both generative AI and non-generative AI workloads. We saw companies turn their attention to newer initiatives, bring more workloads to the cloud, restart or accelerate existing migrations from on-premises to the cloud, and tap into the power of generative AI. AWS operating income was $9.3 billion, an increase of $4 billion year over year. It's driven by our continued focus on cost control, including a measured pace of hiring. Additionally, AWS operating margin includes an approximately 200 basis point favorable impact from the change in the estimated useful life of our servers that we instituted in Q1. As we've long said, we expect AWS operating margins to fluctuate over time, driven in part by the level of investments we're making at any point in time. We remain focused on driving efficiencies across the business, which enables us to invest to support the strong growth we're seeing in AWS, including generative AI. Now let's turn our attention to capital investments. As a reminder, we define these as a combination of CapEx plus equipment finance leases. For the first half of the year, CapEx was $30.5 billion. Looking ahead to the rest of 2024, we expect capital investments to be higher in the second half of the year. The majority of the spend will be to support the growing need for AWS infrastructure as we continue to see strong demand in both generative AI and our non-generative AI workloads. For the third quarter, specifically, I'd highlight a few seasonal factors to keep in mind. First, we hosted another successful Prime Day in mid-July. It was our 10th Prime Day and was our largest ever. Prime members globally saved billions of dollars on deals across every product category. From a profitability perspective, we've historically seen a headwind to operating margin in Q3, driven by Prime Day deals, as well as the marketing spend surrounding the event. Additionally, in Q3, we also begin to ramp up our capacity to handle Q4 holiday volumes in our fulfillment network. And lastly, we expect an increase in digital content costs quarter over quarter from the return of our NFL Thursday Night Football. We remain heads down, focused on driving a better customer experience. We believe putting customers first is the only reliable way to create lasting value for our shareholders. With that, let's move on to your questions.
At this time, we will now open the call up for questions. We ask each caller to please limit yourself to one question. If you would like to ask a question, please press star one on your keypad. We ask that when you pose your question, you pick up your handsets to provide optimum sound quality. Once again, to initiate a question, please press star, then one on your touch-tone telephone at this time. Please hold while we poll for questions.
As this comes to an end on Apple, please join us here, the link's in the chat, for the Amazon earnings. Please tap the like button and join us with Amazon at the end of this broadcast. Thank you.
Marks, maybe a two-parter on AWS. There's been a theme during the last couple of weeks of earnings of the potential to overinvest as opposed to underinvest in AI as a broad theme. I'm curious, Andy, if you have a perspective on that in terms of thinking about elements of capitalizing on the theme longer term against the potential for pace and cadence of investment behind AWS as a segment. And the second part would be coming back to your comments on custom silicon. How do you feel about custom silicon, both from a pace of investment and then more broadly, how you think about it as a return profile on a pivot to more custom silicon in your portfolio over the medium to long term? Thanks so much.
Thanks, Eric. I'll take them in order. I think on the question about investment in AWS and on the AI side, I think where I'd start is I think one of the least understood parts about AWS over the last 18 years has been what a massive logistics challenge it is to run that business. If you think about the fact that we have about 35 regions, and think of a region as a cluster of multiple data centers, and then about 110 availability zones, which is roughly equivalent to a data center. Sometimes it includes multiple. And then if you think about having to land thousands and thousands of SKUs across the 200 AWS services in each of those availability zones at the right quantities, it's quite difficult. And if you end up actually with too little capacity, then you have service disruptions, which really nobody does because it means companies can't scale their applications. So most companies deliver more capacity than they need. However, if you actually deliver too much capacity, the economics are pretty woeful and you don't like the returns of the operating income. And I think you can tell from having, we disclose both our revenue and our operating income in AWS that we've learned over time to manage this reasonably well. And we have built models over a long period of time that are algorithmic and sophisticated that land the right amount of capacity. And we've done the same thing on the AI side. Now, AI is newer, and it's true that people take down clumps of capacity in AI that are different sometimes. But it's also true that it's not like a company shows up to do a training cluster asking for a few 100,000 chips, the same day. Like you have a very significant advanced signal when you have customers that want to take down a lot of capacity. So while the models are more fluid, it's also true that we've built, I think, a lot of muscle and skill over time in building these capacity signals and models, and we also are getting a lot of signal from customers and what they need. I think that it's, the reality right now is that while we're investing a significant amount in the AI space and in infrastructure, we would like to have more capacity than we already have today. We have a lot of demand right now, and I think it's going to be a very, very large business for us. On the custom silicon point, it's really interesting what's happened here, and it's also our strategy and approach here has been informed by running AWS for 18 years. When we started AWS, we had and still have a very deep partnership with Intel on the generalized CPU space. But what we found from customers is that when you find an offering that is really high value for you and high return, you don't actually spend less, even though you're spending less per unit. You spend less per unit, but it enables you and frees you up to do so much more inventing and building for your customers. And then when you're spending more, you actually want better price performance than what you're getting. And a lot of times it's hard to get that price performance from existing players unless you decide to optimize yourself for what you're learning from your customers and you push that envelope yourself. And so we built custom silicon in the generalized CPU space with Graviton, which we're on our fourth model right now. And that has been very successful for customers and for our AWS business, is it saves customers up to about 30 to 40% in price performance versus the other leading x86 processors that they could use. And we saw this same trend happening about 5 years ago in the accelerator space, in the GPU space, where the products are good, but there was really primarily one provider and supply was more scarce than what people wanted. And our customers really want improved price performance all the time. And so that's why we went about building Trainium, which is our training chip, and Inferentia, which is our inference chip, which we're on the second versions of both of those. They will have very compelling relative price performance. And in a world where it's hard to get GPUs today, the supply is scarce and all the schedules continue to move over time, customers are quite excited and demanding at a high clip our custom silicon, and we're producing it as fast as we can. I think that's going to have very good return profile, just like Graviton has, and I think it will be another differentiating feature around AWS relative to others.
And our next question comes from the line of Brian Nowak with Morgan Stanley. Please proceed with your question.
Thanks for taking my questions. I have two. So the first one I wanted to ask about in the second quarter, the retail gross margins, if we're trying to do the monkey math, look a little weaker than expected. Was there any extra pressure on retail gross margins because of discounting, or is that where Kuiper is? Or sort of how do we think about some of the drivers of retail gross margins in the quarter ex shipping? And the second one, Andy, in the past, you talked about cost to serve improvements and sort of getting the North America margins back to pre-pandemic levels. Can you just remind us again, sort of the internal philosophy about executing on that? Is there a timeline to deliver on that? Sort of how are you sort of balancing showing that profitability improvement over the next couple of years versus pressing on new investments like Kuiper and perhaps reinvesting some of those profits over the next couple of years?
Yeah, Brian, let me start with the first question on North America margins. So if you look at the segment operating margins, we did decrease 20 basis points sequentially from Q1 to Q2. I'll remind you that we had to see the annual step up in stock-based compensation at the end of Q1 each year, and that added about $1.8 billion of stock-based comp expense in Q2 versus Q1. So that's impacting to some extent all three segments. But even with that stock-based comp step up, the stores part of the North America segment increased the margin again last quarter. So we're continuing to see strong improvements in cost to serve, as well as improvement in speed, added selection, better safety. So a lot of the key areas that we're hitting on are strong. What you're seeing for the segment is that some of our investment areas had a tick up in expenses and investment in Q2 versus Q1. That's not unheard of. Q1 is usually the lightest investment quarter. Things like Prime Video and devices have less, investment going on in those quarters. But the one thing I'd point out, I think we mentioned it, is Kuiper is stepping up a bit in Q2 versus Q1 as we start to build satellites that will launch in Q3 and Q4 this year.
On your second question, Brian, I continue and the team continues to believe that we have the opportunity to expand the margin in our stores business. And, as I've said on a number of the calls that we've done, it's not going to happen in one quarter. It's not going to happen in one fell swoop. It's going to take work over a long period of time. But, I think that one of the silver linings, if you will, about a year and a half ago and the ricochet of the pandemic and all the growth that we had and the cost to serve challenges that we had was it really forced us to reevaluate everything in the network and really even our most closely felt beliefs over a long period of time. And what it did was it unveiled a number of opportunities that we believe we have to keep driving cost to serve down. And the first one that you've seen play out over the last year or so has been the regionalization of the U.S. network. And I think one thing to remember about that is that while it's had even bigger impact than maybe we theorized when we first architected it, we're still not done fully honing it. There's a lot of ways that we continue to optimize that U.S. regionalization that we think will continue to bear lower cost to serve. But at the same time, we found a number of other areas where we believe we can take our costs down while also improving the customer experience. One of the great things about regionalization was it not only took our cost to serve down, but it meaningfully changed the speed with which we're able to get items to customers. And so we have a number of those other opportunities. Another example of that is regionalizing our inbound network, which is also going to lower our cost to serve and get items more close to end users and diminish the amount of time it takes to get them to customers. We have a number of things that we're working on that allow us to combine more units per box, which lowers our costs as well. And a lot of customers like that better because it's better for the environment having more units per box. So I think we have a lot of opportunities to continue to take down our cost to serve. And strategically and philosophically, just two other things, as you were alluding to that question. I think that from our perspective, as we're able to take cost to serve down, it means that we're able to afford to have more selection that we're able to offer to customers. And there are a lot of lower ASP items today, or average selling price items, that we don't stock because they're not economic to stock with our current cost to serve. But as we work hard and make progress like we are on lowering our cost to serve, that allows us to add more selection. And we see this time in and time out that when we add more selection, customers actually consider us for more of their purchases and spend more with us down the line. I think the other thing, too, I would tell you is that I don't see it as being binary in any way, nor have I really ever seen it this way in the history of the company. I've been here 27 years, but we don't think of it as we can either be investing or we can be working on trying to take our cost to serve down. We believe we can do both. If you think about the examples you gave, the stores business and the Kuiper business they're just different people working on those businesses. So our stores team is going to continue to work really hard on expanding selection and keeping prices low and speeding up our delivery times and driving our cost to serve down, while our Kuiper team is working on how to figure out how to help the 400 to 500 million households around the world who don't have broadband connectivity get that connectivity and allow them to do a lot of the things we take for granted today with broadband connectivity. So they're not going to be binary. We're going to work on them both at the same time.
And our next question comes from the line of Mark Mahaney with Evercore. Please proceed with your question.
Hey, thanks. I'll ask two questions. AWS, those three factors that are causing that kind of acceleration in Q2 and recovery in growth rates from a year ago, those sound sustainable? Is there any reason that we shouldn't see sort of ongoing, acceleration at some level through the back half of the year? And secondly, I just want to ask about a small segment of pharmacy. It seems to me like, at least anecdotally, I've seen you lean in more into marketing for that, and survey work suggests to us that there's kind of greater consumer interest in that. Just talk about where that business is, for you, and is it at a point where you feel like you've moved beyond early adoption and are leaning into kind of getting more mass Amazon customer adoption? Thank you.
On the AWS question, it's always hard to predict what the growth rates are going to be, and it's a relatively large business at $105 billion revenue run rate at this point. But I do think that we have seen the lion's share of the cost optimization happen, and I also do believe that pre-pandemic we were on this march where most companies were trying to figure out how to modernize their infrastructure, which really means moving from on-premises to the cloud because they can save money and invent more quickly and get better developer productivity. And then the pandemic happened and people were in survival mode, and then a difficult economy came and people were trying to save money. And we just see people going back to asking themselves, why aren't we taking this low-hanging fruit here? I mean, it makes I don't want to run my own data centers. I can actually be more cost effective and invent more quickly for my customers if I'm using the cloud. And AWS, with just a lot more functionality, stronger operational performance and security, which really matters to customers as well, and a deeper partner ecosystem continues to be the partner of choice as people are moving to the cloud. And I think the generative AI component is in its very early days. It's as I said, we kind of sometimes look at it and say it's interesting that we have a multi-billion-dollar revenue run rate already in AI, and it's so early. But if we look at the amount of demand that we have from customers right now, it's very significant. So I think all three of those things have a chance and will likely continue over time, and we'll see where that growth rate nets out over the next number of years. I think that one other thing I would say about that too, Mark, is that the business today, as I mentioned, it's a $105 billion revenue run rate business. About 90% of the global IT spend is still on premises. And if you believe that equation is going to flip, which I do, there's a lot of growth ahead of us in AWS as the leader in all those dimensions I mentioned. But I also think that generative AI itself and AI as a whole, it's going to be really large. I mean, it is not something that we originally factored when we were thinking about how large AWS could be. And unlike the non-AI space, where you're basically taking all of this infrastructure that's been built on premises over a long period of time and working with customers to help them migrate it to the cloud, which is a lot of work, by the way. In the generative AI space, it's going to get big fast, and it's largely all going to be built from the get-go in the cloud, which allows the opportunity for those businesses to continue to grow. On the pharmacy side, I think you're right that you're seeing that business continue to grow and to get more resonance with customers. And I think it was always a relatively natural extension for us to build a pharmacy offering from our retail business. But I think a lot of what you've seen, the business has grown really quickly. A lot of what you've seen is that the work that the team has done on the customer experience over the last 18 months has really paid off. Customers love the customer experience of Amazon Pharmacy. And, especially, by the way, when you think about the experience and the speed and ease with which you can order versus walking into a pharmacy in a physical store. If you walk into pharmacies in cities today, it's a pretty tough experience with how much is locked behind cabinets, where you have to press a button to get somebody to come out and open the cabinets for you, and a lot of shoplifting going on in the store. So the combination of what's happening in the physical world and how much improved we've made our pharmacy experience is driving a lot of customer resonance and buying behavior. I think also you see us continuing to expand there. We expanded our XPass package and program to Medicare members, and that program allows customers and Prime members to be able to get up to 60 common medications for just $5 a month. And we continue to launch same-day delivery of medications to cities. We have them in 8 cities, including Los Angeles and New York today, with plans to expand to more than a dozen cities by the end of the year. So we're seeing a lot of growth there, and we're very optimistic about it.
Our next question comes from the line of Brent Thill with Jefferies. Please proceed with your question.
On AWS, I'm curious if you had a backlog number you could share for the quarter. And I guess, Andy, when you think about getting the data state ready, I know AI today is early, but when you see most of these companies are having to move to public cloud, are you seeing a step up and a return to workloads moving to get ready for this data state, even if they're not ready to adopt AI? What are you seeing in those sales motions? Thank you.
Hey, this is Dave. I'll just start off just to give you the backlog figure. So at the end of the second quarter, it was $156.6 billion. So that's up about 19% year over year.
On the second part of your question, Brent, what I would say is that it's true in analytics, but it's even maybe more so true in AI, which is that it's quite difficult to be able to do AI effectively if your data is not organized in such a way that you can access that data and run the models on top of them and then build the application. So when we work with customers, and this is true both when we work directly with customers as well as when we work with systems integrator partners, everyone's in a hurry to get going on doing generative AI, and one of the first questions that we ask is, show us where your data is, show us what your data lake looks like, show us how you're going to access that data. And there's very often work associated with getting your data in the right shape and in the right spot to be able to do generative AI.
Stick with me to the end. I have a special announcement to make. Please stick with me to the end. Thank you.
There's a number of companies who are ready to take advantage of AI, and that's where we've seen a lot of the growth. But it's worth remembering that, again, remember the 90% of the global IT spend being on premises. There are a lot of companies who have yet to move to the cloud who will, and the ability to use AI more effectively is going to be one of the many drivers in doing so for them.
And the next question comes from the line of John Blackledge with TD Cowen. Please proceed with your question.
Great. 2 questions. First, the AWS op income margins were strong, again, mid 30% area. Just kind of what were the key drivers, and how should we think about AWS margins in the back half of the year? And then the international op income margin stepped down a bit, Q over Q. Just curious about that. Thank you.
Yes, thank you, John. Let me start with AWS profitability. So, yes, the margin is in the mid-30s% range in Q2. It's up from the mid 20% range last year. So you're seeing the impact of a number of cost reductions that we've made and efficiencies we've driven in the business. There's also an adjustment that we made to the useful life of servers that happened in Q1. We talked about last quarter. That contributed about 200 basis points of margin year over year. So we continue to work on the cost structure. But again, as we said in the past, the operating margin will fluctuate. It'll be lumpy quarter to quarter. We continue to work to build new products that attract new customers and work on our efficiencies. Second question was?
International segment margin. This is Dave. Just real quick on that. You mentioned we're at about $300 million profit for the quarter. That is up about 390 basis points year on year from a margin perspective. And as we talked about in the past, there's a number of countries at different stages of existence and maturity there. And so I think you're seeing continued progress, certainly on a year-over-year basis, with both our established countries, so the UK, Germany, and Japan, in particular, being sizable contributors to that business. Continued improvement and build out there, similar to the factors we talked about with the U.S., focused on operational efficiency while expanding the customer experience. And then in the emerging countries, as we've said, over the past several quarters, we launched about 10 countries over the last 7 years, really focused on, again, expanding that customer experience, building out the Prime member benefits while building scalable solutions for customers. And so I think in both that established and emerging areas, seeing good progress year over year and working for further improvement there.
And our final question will come from the line of Doug Anmuth with J.P. Morgan. Please proceed with your question.
Thanks for taking the questions. You had factored in some macro and discretionary pressures into your 2Q guide, especially in Europe, and I think you called out computers, electronics, and maybe TVs in 2Q as well. I'm just curious, were the macro trends generally as you expected, or did you see softening through the quarter, and kind of how does that influence your 3Q outlook? And then separately, Brian, can you help us quantify the incremental investment around Kuiper that you talked about? Thanks.
Yeah, sure. Thank you, Doug. The macro factors, if I step back, I think Andy discussed it earlier as well. We're seeing a lot of the same consumer trends that we have been talking about for the last year. Consumers being careful with their spend, trading down, looking for lower ASP products, looking for deals. That continued into Q2, and we expect it to continue into Q3. We're seeing signs of it continuing in Q3. The difference in Q2 was that, again, we had very strong unit volume growth. We actually slightly accelerated when you adjust for leap year in North America unit growth in Q2. So the drop in revenue growth sequentially was tied to ASP and both continuation of existing trends, but also, as we talked about, growth in our everyday essentials business and categories. So while we think we are selling a number of higher ticket items, certainly and holding up well in the market itself, it's certainly not as strong as it's been in a normalized economy. And so lower ASP products are more the mix right now, and we like that because, again, our speed allows us to deliver, especially everyday essentials, quickly, and we like being in the consideration set for consumers on those items. We're not going to quantify Kuiper today, but thank you for your question.
And thanks for joining us today on the call and for your questions. A replay will be available on our investor relations website for at least 3 months. We appreciate your interest in Amazon and look forward to talking with you again next quarter.
Thank you very much indeed. There we go. Amazon earnings done. Now then, got a special announcement to make, and I'm going to pass you now directly over to our Chevron earnings for in the morning. So just stick with me a second. It'll automatically take you there. But I've got a special announcement I'd like to make. So just bear with me just 10 seconds as I make this announcement for you. Let me just click that Chevron link. There you go. Right, that will take you directly to the Chevron link in the morning. This is the Chevron earnings in the morning. If you want to join me there, I'll give you the link. But let me just give it to you right now. CVX. If you've got any questions, you can ask me questions now. Please do feel free. We've got a couple of minutes before I go. So this morning, I put out a special video. I am very bullish on the markets right now. These dips, rotation out of the top stocks. I've gone all in on the S&P. As you can see, it dipped and it's been going sideways, even though Amazon, Nvidia, Apple all been selling off. They're all great earnings. It's good. I've got consolidation here. I'm very, very happy. I've gone all in. And I'm expecting to achieve $1 million on my portfolio. I've shown you how. I put a video out this morning. If you've not yet seen it, you want to watch it to the end. It also explains all about margin as well. So let me share with you this video before I make my announcement here. If you scroll down on the homepage of the channel where we are right now, if we go to videos, you'll see this video here. Where is it? There we go. Nvidia, $1 million. My portfolio road to $1 million. This is the promo for it, but this is the main video. It's become my most popular video of all time. Just under 2,000 views, even though it only says 1,700 there. On my analytics, it's 2,000. It's about 3 hours behind. In the first couple of hours, and I'm going to give you the link to it. At the end of the video, if you watch to the end, there's a link and it explains all about margin and why I'm doing what I'm doing, and so on and so forth. So here is the $1 million video. There you go. Most important video I've made all year. Please go and check that out. And if you are interested in what I'm doing, watch to the end and you'll see the explanation and the links to the margin information, okay? Right, there you go. Now then, before we go, so that's great. You know, my portfolio is going to $1 million. I'm very, very confident of that. Live on air, I'm going to do it in front of you. Remember, I started with $5,000. I had no income for the first year and a half. I've done it all here live with you on the show. So what I want to do before we go, how many people are currently watching me right now? Let me just check how many people are with me. So if you don't know, I was voted the world piano man by Sir Elton John. Here's my music channel. And what I want to do, I want to raise millions of dollars for your favorite charity for free, with no fees, no charges, no credit card fees, no YouTube fees, nothing, 100%. So this is what we're going to do. Here is the link to my music channel. Okay, I do concerts and fundraiser events all the time, have been doing for years. Here is the music channel in the chat right now. What I need you to do is just click on and become a subscriber. You haven't got to watch, you haven't got to see anything, I don't mind. I'm on 5,910. I need to get to, 5,910, yeah. I want to get to 10,000 subscribers. At 10,000, YouTube turn on what's called YouTube Giving. And then I can do concerts, ad revenue, the super chats, everything will go to your favorite charity. So if you subscribe and you get all your friends to subscribe to my music channel, I've given you the link in the chat. It's right there. If you do that and come back and say, Martyn, I got everybody at work, all my friends at work, school, college, whatever, to subscribe to you, 100 of us have subscribed to you, can you now do a fundraiser, concert, and event for cancer research, Save the Children, whatever it might be? I will say yes. It will be completely free. I will do the concert, and all the money, ad revenue, super chats, everything goes directly to your charity, as long as it's a registered charity. There are no fees, there's no commission, there's no credit card fees. YouTube donate all of the money and I will do all of the work for free. All I need you to do is click subscribe. So you're literally giving money to charity by doing absolutely nothing. It's the best thing ever. I really hope you all do it. I've done fundraisers for global events like the telethon for the Lions Club, raise lots and lots of money. But this new project I've got will raise millions for charity cost you nothing, and I will do all the work. All I need you to do is click subscribe. Now, if you do click subscribe right now, your name will come up on the screen if you are a public, if you subscribe publicly. All right. So what I'm going to do now is bring up the subscription count. It was 5,912 just some moments ago, and it started to move. Look, here it goes. Just started to move. It's just gone up to 5,914. So if you'd like to play your part and you'd like to help raise money for charities for free by doing absolutely nothing other than click subscribe, you can be part of it. So if that rolls round now, you'll see it on the screen. Let me give you the link one more time. If you want to go and check out my music, please do. You can see me singing in my Vegas show. I had a Vegas show. I've got a West End show. We have concerts every Friday. I've got Paul McCartney on one of my videos. Michael Jackson on screen singing behind me in one of my videos as well in my theatre shows. All kind of things you can see, but you don't have to watch. You don't have to do that. But I just ask you, can we get one more subscriber by any chance? We want to get to 10,000 subscribers by the end of the year so we can do a Christmas concert for all the wars and all the charities, and you can choose which charities you want me to do. It's completely free, okay? There you go, one more time. There's the link. There we go. One more person did it. Fantastic. So what I'm asking you to do now is go and tell your friends, say, look, hey, we want to raise money for this charity. Can we all subscribe to this channel? Go and share the link and then come back to me in a live chat or on X. Here's my X account. You can let me know and say, Martyn, I've got 100 people have subscribed to you. When you get to 10,000, would you do a fundraiser for whatever? As long as it's a registered charity, so it's fully legit and legal and all the rest of it, I will happily do it for you. So isn't that amazing? What a great opportunity this is for all of us here investors to raise money for those around the world. Right, that's it from me. Thank you very much for taking part. Thank you for those that did it tonight. See you back in the morning for the Chevron earnings. There's the extra channel waiting. Here is the main channel. This is the Chevron earnings in the morning. Join us for that if you'd like to. Oh, there's another one. Joan Shah. Joan Shah just subscribed to the music channel. Thank you very, very much indeed. Absolutely awesome. Look at this. There's another one. There's another one. It is amazing. I can't wait to be able to do a global event and raise millions. I can go on forever and ever doing this all the time. No stop. I never give up. I'm here all the time. Absolutely brilliant. I love it. Thank you very much indeed. Tell your friends, get everyone you know to subscribe to it. You don't have to watch. I don't care what you do. It's not about me. It's about me raising money for your favorite charities. Thank you very much indeed, everybody. You're the best. That's it from me. Thank you so much indeed. I will see you in the morning. This video will go directly to the extra channel. Sorry, what? No, it won't. It will go directly to Chevron. See you in the morning, bright and early. That's it from me. Thank you very much for joining me. I'm extremely bullish. I'm holding all my positions. I'm not going anywhere. Just got to give it patience. That's it. Chevron. What time in the morning? It's 7 a.m. in the morning. If you stay where you are, it'll take you right there. Look on the homepage of the channel. It'll tell you what time it is, but it is 7 a.m. in the morning. That's it from me. Thank you very much indeed, everyone who subscribed tonight. Awesome. Tell all your friends, get everyone to do it. Why not? The sooner we get there, the sooner that we can raise money for your favorite charity. That's it. Good night. God bless. See you all in the morning. Until next time, as always, take care of yourselves. Oh, there's another one. Oh, that's the regular channel. That's not the music channel, but that's fine too. Did it move? Did it move? No, 5916. It's stuck there. All right, that's it. See you back in the morning. Take care of yourselves and each other. Wow, double earnings tonight. Best channels in the world. Best audience in the world. I can do anything with your support. Good night, everybody. Bye-bye for now.